Booyah! Let's talk about volatility, the market's wild mood swings. Think of it like the weather. Some days are calm and sunny, others are stormy and unpredictable. In the stock market, volatility is just how fast and how much prices move. Low volatility? That's a peaceful day. High volatility? That's a hurricane of buying and selling. Volatility isn't good or bad. It's just movement, the market's pulse. Without it, nothing happens. But when it gets wild, people panic. Imagine selling baseball cards. One day, a rookie's hot, prices soar. Next week, he's injured, prices crash. That's volatility. The stock market is a giant marketplace, prices moving every second on news, emotions, and noise. Understanding this rhythm is key to mastering the game. So when you see those scary red arrows, breathe. It's just a stormy day, not the end of the world. Buyers and sellers are in a tug of war. Sometimes sellers win, sometimes buyers. The key isn't to run from the storm, but to have the right gear to weather it. We're not here to predict the weather. We're here to build an arc. That's how you prepare for real, long-term gains. Don't panic and sell. Ride out the storm. Volatility is just part of the journey. What causes these wild swings? It's all about new information. A company reports great earnings, stock soars. Bad news, stock tanks. Macroeconomic news, like the Fed raising rates or inflation data, can shake the whole market. Geopolitical events, trade wars, or global conflicts add more uncertainty. And the market hates uncertainty. Then there's emotion, fear, and greed. FOMO drives bubbles. Panic drives crashes. People buy because others are getting rich, or sell because everyone else is scared. And don't forget the machines. Algorithms trading at lightning speed, amplifying every move. One bad headline can trigger a cascade of automated selling. In today's market, both human emotion and technology drive volatility. The market is a battleground of emotions. When stocks drop, fear takes over. You want to sell to stop the pain, but selling at the bottom locks in your losses. When stocks soar, greed kicks in. You chase hot stocks without research. That's how people buy high and sell low. The worst possible strategy. News cycles amplify fear, making everyone anxious, even those not invested. This anxiety spills over to Main Street, affecting spending and confidence. Pros know this. They buy when you panic. Your fear becomes their opportunity. To win, you must control your emotions. Don't let fear or greed dictate your moves. Stay calm, stick to your plan, and ride the roller coaster. Volatility is a double-edged sword. Danger for the unprepared, opportunity for the wise. If you're all in on risky stocks, a downturn can wipe you out. Lack of diversification or needing cash soon, volatility can force you to sell at the worst time. For young investors, a crash is just a blip. For retirees, it can be devastating. But for those with a plan, volatility is a chance to buy great companies at a discount. When panic hits, it's like a Black Friday sale for stocks. Did Amazon or Microsoft's business really change overnight? Usually not. Fortunes are made by buying quality during chaos. Think back to 2008. Those who bought during the panic saw huge gains later. Volatility creates mispricing. Your job is to spot bargains. Don't run from panic. See it as opportunity. That's how wealth is built. So, how do you survive the chaos? Start with a plan. Know your goals, time horizon, and risk tolerance before the storm hits. Diversify, own different types of assets, sectors, and even some international stocks. Diversification smooths out the ride and helps you sleep at night. Do your homework. Know what you own and why. If you understand your investments, you'll have the confidence to hold or buy more when prices drop. Turn off the noise. Focus on facts, not headlines. Think long-term and automate your savings. The market goes up over time. What matters is time in the market, not timing the market. Set up automatic contributions. Dollar cost averaging buys more when prices are low. This takes emotion out of investing and puts your wealth building on autopilot. Stick to your plan, stay calm, and let volatility work for you. That's a winning strategy. Booyah!